Welcome to the webinar. We'll be getting started here in just a moment. Before we get going, I want to do a quick systems check. Just give me an okay in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Thank you very much. If anyone has any issues as we go along, please just let me know. Obviously, we're going to focus on technical analysis today. That's the title, but as is par for the course, we will clearly take a look at some fundamental news to get an idea of maybe what direction you might prefer to be trading and looking for proper technical entry points then after you get a feel for which way the wind's blowing fundamentally. Some things to keep in mind, as always, as we move forward. All investments have risk. I think we all understand that. No one trade or move is guaranteed to have profits. You know, whether you're investing in real estate or investing in CFDs, Forex trading, options trading, spread betting, all of these styles of trading obviously carry risk. Now, also just as obvious, we're all here because there's the potential for nice profits also, which is the whole point of us all being involved with Forex trading in the first place. So as we go forward, what we cover, keep in mind, is not meant to be financial advisement, but from an educational perspective, we're adding to your tool belt, so to speak, new tools so that you can add to existing strategies, more knowledge, more information, or if you're brand new to things, you can start building a strategy from scratch with some useful information. And if anyone wants to read our full risk disclosure statement, it's on abatrade.com. Okay, now technical analysis, those of you that are brand new to it, what is it? And please, if you have experience, don't run away. We're going to get to some strategies and live potential moves in just a moment. Technical analysis is looking at the historical movements on the chart. Irregardless of what's going on fundamentally, you're looking for patterns, for predictable movements on the charts. You can kind of start to look at the candlesticks, and they start to look actually like music notes, like repetitive patterns that are predictable, that on occasion change pace or change direction. And the more experience you have with this, the more you can start to use what I would call manual methods of technical analysis. And that's really what we'll lean on in the webinars, is drawing our own lines, finding our own price levels, doing things that help you know that you're understanding what you're seeing, rather than just adding indicators on that are giving you kind of sometimes blind signals in one direction or another without taking into account maybe fundamental news that just happened today. And in general, indicators just can't take into account those things because they're looking strictly back at the technical analysis on the chart. Not to say indicators aren't useful, they certainly are, and on occasion we'll use some, but today we'll be focusing on the manual methods of technical analysis. As we go along, please keep in mind you can interrupt me at any time, ask questions, give input. Please don't think you need to wait until the end of the webinar, as this slide might suggest, to ask questions or chime in with some input. Now, as we get going, we'll be on my demo account. And just a quick look before we take a look at some fundamental news. Yesterday, we did a crypto-based webinar, and we were looking at the fact that the cryptos in general were sitting on a support level and bouncing up off the support level. And we looked at two potential options in terms of the technical analysis. One was to go with the bounce off the support level as a market move because it was right up above the support. And we also talked about putting a pending order below that support in case it reversed and broke the support. You could get out with your stop loss just below the support level and get in with a pending order to sell, which looks like that would have turned out quite nice as it broke the support with a breakthrough candle and continued to drop quite a bit before it consolidated sideways. Just a quick quiz. What kind of pending order would that have been below that support level that would have kicked in automatically for you? And in this case, given you a nice potential profit? What would sell from a lower point? And if you don't know, Type that. Say you don't know. I'll show you how to do that. Yeah, it's a sell stop. Many of you are answering. Sell stop prepares a pending order to sell from a lower point. So in this case, we would have been wrong and lost a little bit on our market buy. It reversed, broke the support. We'd have kicked in on our sell. And you see, I drew these lines yesterday. We're looking at potential up and potential down. It broke the support, kicked in the sell stop here, maybe around 73.75, and dropped clear down to 72.59, over $100 drop on each coin that you'd be holding in the position. A one lot position would have paid over $1,000 on that one pending order move. And you might have lost, let's say, 200 on the reversal on that market buy. So overall, you're 50%, but guess what? You still could have profited. This is the type of technical analysis that you can set up to trade. You don't have to be right. You just have to be smart. And a lot of times when you're trading, it's not about being right on your first move, which clearly we weren't here, but being smart to back yourself up with a potential second move. Please type okay if you're hearing me clearly. I've got someone saying no sound. Okay, so I'll let that person know it's just them. Give me one moment. Thank you, guys. I understand the audio is working. I'm going to let Ellie know it's just him. Okay, good to go. All right, so back to my whole point. I just kind of fell on this chart because it was there from last night. But you can see the technical analysis strategy worked, even if you weren't paying attention to any fundamental news. Now let's take a look and see how can we improve upon and maybe avoid the false bounce. And maybe we could have only done the breakthrough sell stop, okay? And for anyone who doesn't know how to do a sell stop, you go from market execution to pending, pick the pending order type, and you have 4 types. Sell stop sells from a lower point. And if anyone needs any help with that, just let me know in terms of pending order types as we go through. All right, so fundamentally, what's happening today before we do some technical analysis on some current movements beyond this crypto that we looked at. So if we look at, and tell me how long it takes you to understand which way the wind is blowing, which way you think the markets are moving today to get an idea of what way you might want to trade. What's this headline mean? U.S. futures drop ahead of trade deadline, Fed meeting. First of all, what trade deadline are we talking about? What is it that's been driving the market every week for the past 2 months? What 2 countries are in kind of a trade war right now, trying to negotiate a trade deal? Yeah, U.S. China. That's exactly what they're talking about. Do you think that the markets are in fear or happy right now? Look at all the red. Futures, red. Yesterday's numbers, red. The only thing green here is the fear index, the VIX. Okay? Is that good for the markets or bad in general? Yeah, exactly. Exactly. There's a lot of fear right now. That's why the fear index is going up. By the way, if the fear index is rising, what do you think gold is doing? Without looking at the chart, what's gold doing if the VIX, the fear index, is rising? Yeah, probably going up. And without looking at the chart, what's happening with oil? What does negative economic sentiment typically mean for the price of oil? If people think it's bad news for the economy right now, what does the oil price typically do? Yep, exactly. Many of you are already saying it. Probably falling. Obviously, there's no guarantee, right? There are exceptions to every rule, right? So every time you see the fear index going up, it doesn't mean oil has to be dropping, but many times it is. And every time you see the fear index going up, it doesn't mean the indices are dropping, but many times it is. And with trading, it's not about trying to be right every time. As we said, any one trade can lose. But what it's about is being right often enough to profit. And that's what this sort of information can do for you. It can put you in a situation where you improve maybe from, I don't know, your win percentage from 45% to 52%. or from 35% to 45%. And you understand if you're setting up your take profits and your stop losses, your risk management in different ways, you don't even have to win 50% of the time to profit. Depends how you're setting things up. But certainly an improvement of even 5% by putting in more information into your strategy is huge on your P&L in the end. It can have a huge effect. So taking 5 or 10 minutes, it doesn't take us long to see which way we might prefer to trade. Okay? Let me just real quick. If you see this information and you see gold move up to a resistance level, or you see gold go down to a support level, which do you prefer to trade on? Which do you trust more? If there's fear in the market, the fear index is rising, the indices are dropping, do you prefer to trade up from a support or down from a resistance level? We'll get into natural gas, Shanye, if we have a chance, okay? Yeah, you probably prefer to trade up from a support if the wind is blowing that direction. Isn't it maybe more likely to have a breakthrough on the resistance and not respect the resistance level for gold if all this fear is in the market? This is the sort of thing that can start to help you avoid the false signals, avoid trusting a support level or a resistance level that maybe is not going to hold, okay? And that small increase in percent where you're right can make a big difference. Let's look at a second source. I wouldn't trust just one source. We're looking at investing.com. What about Reuters? This was one of the first headlines I found on Reuters. I just pulled this up a little while ago. World stocks sink as tariff deadline approaches. When you start looking at all the major news sites, and the first thing you see is the same headline about the same thing, okay, they're talking about world stocks, not just U.S. World stocks having a sinking feeling here as the tariff deadline approaches, which is the 15th of this month. Trump has promised to raise tariffs more on China, December 15th, if there's not a deal signed before then. So there's some nervousness. And so what about economic announcements? Those can kind of move the market. What do I see here today? Mixed news, some bad news out of European Union, some good news out of China, some bad news and mixed news out of Great Britain, more bad than good, it looks like. Some positive announcements out of European Union and some announcements coming up on the USD. So all in all, on the economic announcements, the scheduled announcements, when we're looking beyond the breaking headlines, kind of mixed. I don't think it creates much of a direction, but you look at this to form your own opinion as to what's happening. I see a mix of even green and red. If I'm trading on the pound especially, I see more negative than positive, okay? Quite a bit of red. So with that said, let's go to the charts, take a look at what we think might happen. Someone was asking about natural gas. What affects the price of natural gas if we're going to look at that chart? Couple things. The weather, right? The weather affects the price of natural gas. What else? Yeah, exactly. Supply. Many of you are already saying supply. Have the supplies been in excess with natural gas? Yeah, OPEC might make some decisions about beyond just oil, about natural gas, cutting production. Right now, is there a supply glut or a shortage of natural gas? For sure. There's an oversupply. There's a supply glut. The U.S. has been kicking out tons of natural gas, other energy producing nations as well. And the winter actually has been a bit warmer than expected. Okay. Yeah, Gerard, there can be some political influence as well. So what do we expect to see for natural gas if there's an oversupply right now and the winter's been a little warmer than expected, thereby cutting down on demand? What do you think has been happening with natural gas? Predictably, before I even pull up the chart. Yes, exactly. It's been dropping. Let me pull up the chart. If you look from Friday to Monday, from Friday's close to Monday's open, what does that tell you about the sentiment for natural gas? What happened there? What do we call that when the price skips a space like that? Yeah, it's a gap. Good, Gerard. That's a large gap, by the way. It gapped more than it moved almost in the whole prior day. Okay? That tells you something about sentiment. Now, unless there's a big change in the supply, unless there's a report that comes out that, wow, the winter's expected to get much, much colder all of a sudden, natural gas could have trouble climbing up past that gap. Okay? Sometimes a technical analysis strategy is to trade for the gap to refill itself. Okay? This would be a limited risk strategy. Now, you're going against the fundamental news if you do this. I'm not saying you should do this. I'm saying I've seen it work many times. The market a lot of times will refill the gap after it's created. What I mean is it gapped down, it found support. We see the support level here, okay? Support, support, and now it's starting to work its way back up. The strategy is to trade for it to refill the gap, and your exit point could be just before where the gap first started from the prior Friday. Okay, many times you see this type of gap through a weekend, from Friday to Monday, sometimes even during the week, but more often you see larger gaps through the weekend. So that's one potential strategy, is to trade to fill the gap. Now, what would help this strategy is if you did a bit of research first and saw it. What's the weather report? What's the expectation for the next 2 weeks, for the next month? What are they reporting? Is it expected to get a lot colder? That sort of thing. If you find some fundamental news that supports your idea, and I'm talking to you, Shinenye, because you asked about natural gas. If you find some fundamental news, do a bit of research about the weather, because it helps drive natural gas price. If it says, wow, unexpectedly a large cold snap's coming, then maybe you trust that it will refill the gap, and you can take a shot at a buy with your stop loss not that far down, just below this little support that formed. If it breaks that support, maybe that's as much as you're willing to risk. Now, I'm not here to tell you that that's where your support should be or that you should buy, but that's one potential strategy if you believe in natural gas refilling that gap. And it really is a limited risk with a potential profit that's much larger. Okay? All right, so if anyone else has a particular asset they want to look at, let me know. I'm going to go to what I know are the movers today, some large movers. Gold. Okay, I already did a survey before we pulled up the chart and asked you which way do you think gold is going. You're welcome, Shinyenye. I asked which way do you think gold is moving, just based on the quick 5-minute look that we had. And I'll remind you, we looked here and we said within really 1 minute, we read the headline and we saw all the red, and the only thing that was in green was the fear index. And by the way, this has been like this for the last 4 hours. Not like it just happened, but like the last 4 hours, this has been looked exactly the same way. So you all said gold's probably rising. And look how long gold has been rising. Okay, gold has been rising. We're on the 1 hour candles. Gold has been rising all day, all day. Those headlines that I showed you on investing.com, on Reuters, have been there all day. Just with the fundamental news, you could have bought on gold and be way in the money. Now let's throw in a little technical analysis. Okay, if you've ever talked about breakthrough candles, resistance levels, I showed you how to do a buy stop, right? If you know the wind is blowing up for gold based on that quick look at the headline, simple breakthrough strategy, and you could easily be winning. Okay, here's one resistance level. Resistance, resistance. Here's the breakthrough. It becomes support. What kind of pending order would already have you in profits by simply placing the pending order up here to buy if it broke this resistance level? And that was just a few hours back. You guys already said it. Yeah, buy stop. Okay, it's not like I searched for 3 hours to show you that the sell stop would have worked on Bitcoin, just to trick you guys or something, right? Here's another example that just happened 3 hours ago. Those headlines were there all day. We take a look, a simple buy stop would have kicked in right here. And look at the climb. Look at the breakthrough candle here after it broke the resistance. Look at the size of that candle. You would already be from 1465, and it peaked up here at 1467, almost 1468. Do you know how much you'd make on a one lot position with a $2 climb in gold? That's 100 ounces in a simple one lot position. Okay, $100 for every dollar it rises. If you don't think making $200 in a simple scalp move in that short of a period of time, guys, we're looking at 5-minute candles. We're talking in 15 minutes, you could have made $200 on a one lot position. Now, I'm not here to tell you should trade one lot. The size trade you should trade is appropriate to what your risk tolerance is, what your balance is, etc. So you could trade 0.1, you could trade 0.01, any trade size you want, but the strategy idea is the same. Okay, simple breakthrough. Did this happen more than once today? Certainly it did. Let's draw all the breakthroughs where you could have used buy stops once you knew which way the wind was blowing. Okay, resistance here, breakthrough. Okay, resistance here, resistance, 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 breakthrough, a little pullback, and up it went. Depending how far you had your stop loss, maybe you lost on this one. So let's be fair, right? Let's say you lost on this resistance breakthrough earlier today. You tried it again, you win on this one. You tried it again, you win on this one. Okay, how many of you would be happy with winning 2 out of 3 on a simple strategy like putting buy stops above the resistance on 5-minute candles? For gold, after you saw all the headlines were telling you gold should probably rise, would you take 2 out of 3? I'd be happy with it, right? Of course, we all would be. Can you profit winning 2 out of 3? Of course, you can profit winning 1 out of 3, because if you set your stop loss just a little bit below the breakthrough, you're risking less than the potential rise, as you see here. Okay. It doesn't work out this way every time, right? But the idea is being right enough to profit. And that's what we see here. Simple breakthrough strategy on gold today, using buy stops, pending orders. You don't even have to sit and watch it. You look, find the resistance, put your pending order the way you think it should go based on the fundamentals and the technical, and boom. You just need to be profiting more than you're losing, right? All right, so we also said what we thought oil was doing. If I pull up oil, do you think it's the reverse of this chart? Without looking at it, what's oil doing? If gold's climbing, if the indices are dropping, if there's economic fear, what's happening with gold, do you think? I mean, with oil. Yeah, let's say, Wesley, I'm with you, probably dropping. And look what it's been doing. After a spike up, nothing but dropping, okay? So let's say you were trading down from this resistance. Here, resistance, it came up, you lose once, right? I lost once. If I'm trading down from this resistance and it breaks through, okay, I lost once. No problem. Now I put my sell stop back below it. I could have put my sell stop back down here, saying, okay, it's bad news for the economy today. Everything seems to be selling off. I'm not going to be tricked and buy on oil because everything in the fundamental news is telling me to sell. So my technical analysis would be to put my sell stop below this support that it broke above and wait for it to break back down. And you see, boom, it breaks it. And look at the size profit you could have had within what, 1 hour? Within 1 hour. It dropped from 59 down to at its low point, 58.5. You know, a one lot position is 1,000 barrels. 1,000 barrels on one lot. If this dropped from your entry point below this established support, as it broke through, that becomes support, and then it breaks through. If you got in at 59 or so, and you got out around 58.5, that's 50 cents drop in the price of oil what do you make on a one lot position if it drops 50 cents? 1,000 barrels in one lot. 50 cents drop. That's 50 cents per barrel times 1,000. 500, right? You just made $500 in this one move down. So the fact that you might have lost selling from this resistance, boom, you lose once. Okay, I lost to my stop loss. Maybe I lost 100. False signal, it breaks through, goes back up. Depending where you put your stop loss, you're still in it and you win. Or it hits your stop loss, you're out, you re-enter when it breaks again. And let's say worst case scenario, you lost once, it came down, broke below, triggered your sell stop, went back up, hit your stop loss again. You reset another sell stop. This time you win. You lost $100, $200, and then you won $500. So in the move, you're up 300. You only won 1 out of 3 in that example, and that's worst case scenario, right? I'm assuming your stop loss was really close and that this signal here caused you to lose before it dropped. You re-enter, you still win 1 out of 3. And overall in this scenario would be an overall profit. Okay, so that's an example where you could be wrong more than you're right. You lost 2 out of 3 of those signals, of those entries, but in the end, you still could have had overall profit because once it did go, look at the breakthrough candles. Look how rapidly they move. This is the idea of the breakthrough. When a support level or a resistance level is broken, many times you get those breakthrough candles, a larger candle than many of the prior. Okay? Any questions, comments on that? And I'm being realistic here. We lose once, it goes down, we enter, we lose twice, and it comes down, we enter again, we win the third time. 1 out of 3, 33%, doesn't sound great, but overall profit, that sounds great. Give me an okay if you're with me and still hearing me fine. Okay, some of you are asking, is it reversing? Did the news change? What's the fundamental news right now? Last I looked, negative. Okay, so sometimes you're guessing, is it reversing? Sure, it could pull back up, or maybe it won't, right? When you just guess and say, maybe it'll pull back up, and you trade like that, you tend to win 50-50, and then you lose because you're gradually giving away spread, right? You don't want 50-50, 50-50 guessing all the time. Okay, guessing, you want to take it further than that. So sure, after a lot of dropping, there could be a pullback. Right now, it's pulling back up some. Doesn't mean you had to trade on it or that it was predictable, but it is pulling back up. Let's look at the bigger candles, and we can get an idea of what we think will happen. Here's 30-minute candles. Okay, it did not reach the support level. You see, it came down here, it bounced back up some. It did not reach the support. If the news doesn't change, okay? Yeah, when I started the webinar, I kind of preempted it by saying we're going to focus on manual methods of technical analysis. Okay, indicators have a hard time taking into account fundamental news, and they many times give you false signals in one direction and good signals in the other. So what I want to do is teach you how to do it yourself, how to produce your own signals. Then later you can add an indicator and make sure the indicator agrees with you with the timing. So in this example, if we know we want to sell on oil, if that's what we've decided we should sell, then you do your own price levels and lines and you find what you think is the right entry to sell from, technical analysis wise, then add the indicator and only read the indicator if it's giving you a signal in the direction you prefer. Okay, then you can trust the indicator in that direction more maybe than the other direction based on your own knowledge first. So if you can't tell, I used to be a math and science teacher, and I always taught people before they could use a calculator to learn how to do the calculations manually, right? Before you use a machine to do it for you, you should do it yourself so you really understand what's happening. And that's the same idea. Yeah, okay. Yeah, listen, if you're just using the indicator blindly, it has no idea about what direction you should prefer based on fundamental news. unless somehow the indicator's tied into announcements and breaking news articles, which some algorithms have managed that. Okay, so here's an example. If the news today does not change and oil comes back up to this resistance level, if oil comes back up to this resistance, somewhere in this area, you might prefer to sell rather than buy, right? You might prefer to sell from the resistance rather than plan for a breakthrough. You could do both, right? You still could do both. The question is, would you trade on oil right now? It's kind of in between, isn't it? Now, I do see right here, isn't this an old support level right here? Support, 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 right? This was a support level right here, this price line. And look where it hit, right on cue. It hits that support level and down it goes. So if you're scalping, it's nice to say, okay, fundamental news says oil should drop. It just pulled back up to this old support level. Support, support, breakthrough, resistance, breakthrough, breakthrough. So this is a support level that becomes resistance, right? So as it got to that spot, why do you think it dropped? Why do you think it just pulled back from that spot? It's not a coincidence. It happens too often that small movements occur right at the spot you would predict or near it based on the support or resistance level. So here's the price level. Look, it hit and at that exact spot dropped. And look where the support level is over here. Support, support, breakthrough, resistance, right on that line. And that's where the breakthrough was. So that's where it reversed. So if you're going with the fundamental news, that would have been your spot to sell. If you believe in the negative sentiment, the high fear, economic stress, look what's happening. You could have already scalped this, actually. It already dropped 10 cents, right? We just need a little further to get past the spread and you're already in profit, right? So it starts to become very predictable, these little reversals, even on the small candles. Gold, same thing. While we're talking, gold formed a support level here, right? Support, support. Why would it have made sense to trade up from this support? Why trade up from the support? Because there's negative economic news right now. The fear index is rising. You could trust this support level maybe to hold more than break through. And look what happened. It bounced from 1465 up to 1467. It bounced $2. You could have already been out with a profit. If you had your trailing stop on it, boom, you already won, right? What else can we look at? Nasdaq. Nasdaq's in a little bit of a pullback, right? Pulling back up after it dropped. Let's check for new information. Okay, let's see if anything new came out. We've got economic calendar. And just now, this just came out. Bad news in the U.S. economy. You see this? Non-farm productivity down more than expected. Unit labor costs up less than expected. It shows some signs of a weak aspect of the U.S. economy. As good as last Friday's numbers were, this shows some weakness right here. That just happened. That's why we saw gold jumping around and oil jumping around. Okay, that explains it. So there's a lesson to learn, right? Before you place a trade, not only look at what already happened, but you should look at what's going to happen soon before I open a trade so I know what could affect it, right? So this is certainly causing stuff to jump around, these numbers that just came in, okay? Now let's go back and see what's happening on the chart. Do you think this NASDAQ is a temporary rise? I mean, we've got basically not great news on the U.S. economy, and we got the NASDAQ rising. Does anyone know about interest rates in the U.S.? Tomorrow's an FOMC meeting and an interest rate decision. So sometimes the opposite occurs than you expect. And let me explain. Bad news in the U.S. economy means more likely that the FOMC committee in the U.S. might lower interest rates again. Okay? And if the U.S. lowers interest rates, is that good for the Nasdaq, good for stocks, or bad? Lower interest rates, is that good for business or bad? Typically, what happens to the Nasdaq and other indices if the interest rate is going to be lowered? Yeah, they tend to rise. They tend to rise. So with all that good news Friday, with the jobs reports and everything, maybe the indices, those who trade on it, those who invest in stocks and indices, are viewing that negative news that just came out as maybe good news for the indices, because that negative news would increase the likelihood maybe that the FOMC will lower interest rates again. So sometimes you think, oh, bad news, indices should drop. But because there's an FOMC interest rate decision tomorrow in the US, that bad news might be viewed as positive news, which explains why when those negative numbers just came out, the Nasdaq went up and not down. Okay? And let me show you. We're looking at today. Let's look at tomorrow, and I'll show you. Economic announcements tomorrow. Whoops. Let's get back to the page. Tomorrow, besides crude oil inventory, we've got the FOMC statement and Fed interest rate decision right here. Okay? 2 p.m. New York time tomorrow. They're expected to keep the interest rate the same. It's 1.75. They're expected to keep it there. If there was bad enough news today, maybe it's more likely they might lower it, or maybe it's likely that they won't lower it, but they'll say, listen, if this continues, we'll lower it again next year, right? More bad news means higher likelihood they could lower the interest rate again. So it's not a surprise to me that we see the Nasdaq going up. Look, it's breaking the resistance right here. It just broke that resistance level. If you're scalping, once it breaks it by enough, you could go for a move to continue to the next resistance level up here. And if it breaks back down too far, you get out, right? This is how quick fundamental news changes and why you have to be on top of it with your technical analysis. Look, it's not like we had to be surprised by it, right? We knew in advance there are U.S. announcements at this time, 8:30 a.m. New York time. They just came out during the webinar. Negative news. If you're up with the idea about the FOMC being tomorrow an interest rate decision, you'd understand that the indices might respond positive to this negative news for the reason I explained. And then this is not unexpected if you understand that relationship. Type yes if you understand, if you're with me on that. Or questions if you have them. Look what's happening to gold. Why is gold all of a sudden dropping and breaking support levels? It's the news that just came out. Okay? Indices are rising, gold's dropping. There it goes. Okay, that quick, you can change what direction you think you should trade and redo your technical analysis. While I was showing you the Nasdaq, you could have already sold on gold and had your resistance level here and your stop loss just above that. Okay? Excellent. I think this is a good spot to stop. A lot of potential for reversals right now. Okay? The markets are really moving, gold, oil, and the indices. Keep in mind, check the latest breaking news on the announcements and the headline. Set up your technical analysis, and we see how profitable that can be, what the potential is. Always manage your risk also the way that makes sense for you as you're going after those profits also. Okay, thank you for joining. For now, it's been nice. Some of the questions were good. We pulled out some good information and expanded on some things because of the input, so I appreciate that. And I hope to see you in the webinar tomorrow. Bye for now.